Hey everybody, how you doing? It's Bruce here, Stock Markets with Bruce. They call me Uncle Bruce. I'm here to talk to you today about GameStop shares. I would love to give you an official press release from the company. I would love to give you insider breaking news from a source that has been quoted by the Wall Street Journal as to what has been going on with the stock lately. Can't do it. But what I can do is I can show you some charts to see what's been going on. I can explain where the company is, and I can also give you some pointers as to what probably or what might be going on. And this might be the ammo you need to decide what you're supposed to do, whether you own the shares or not, whether you're thinking of getting into this thing, whether you are an option player or an option writer, cash secured put writer, call writer, poor man cover call writer. You have to decide. And any information you can get is probably better for you. So let's show you very quickly what we have had happen here in the last week. All right, so I'll pop myself way down here. And here is the 5-day moving average of GameStop shares. All right, so final trade on the top here, you'll see 1609, that number, that is the price of the stock after hours. I think it's 8 o'clock Eastern time, Friday night. Today is May the 5th. This was May the 3rd. The actual closing price of the shares are just above here, 1647, with a gain of 371, up 29% in one day, with a volume of 36.29 million shares. Average daily volume 4.6 million shares. This is what happened on Friday. And if you look at the chart way over there, you'll see that run up all the way up there. That last fifth of that chart is Friday, the Friday activity. Look at Thursday. It came in from this 1050, 1080 level, went up to 1250. Look at Wednesday, Tuesday, and Monday. We were under $12 a share, probably around the 11 range to the 1050 range for 3 solid days until all heck broke loose on Thursday and then Friday. The daily range, just Friday's range. Look at that just over here. You can see 1231 was the low and 1745 was the high in one session. We got up to 1745 on Friday on the trading. Let's look at another chart here to give you a little more context. Where have we been lately? On the far right of that chart, you'll see the run up here to this 16 level. Going back April 22, April 15, April the 8th, you can see where the shares were under 11 in that 10, 11 range, even hitting a low of 995 for trade or two. Here is the 3-month chart. You can see again the final run up here. We're now back to levels not seen since April or March and February. And if we go back a little more, this is a 1-year chart on GameStop. So you can see here the shares were in June of last year, just at the start of this chart, you see they were over 20 to 25, 27 a share. And then they came down into the low teens, jumped up to get into that 17, 18 level back in December to January of 24. And then we had the slow grind from 16, 17, $18 all the way to 10. And now this pop out of nowhere. All right. So there's some charts for you. Here's something else for you to look at. This is a key data thing here. The top line showing you the range of the stock for Friday, 1231 to 1745. The 52-week range, 995 to 2765. The market cap, $5 billion. How many shares are outstanding? 306 million. How many are free floating? 266.9 million. Go down a little bit further. Forget earnings per share, dividend. Forget all that. Go all the way down to your short interest. That is just right here, right there. 59.95 million. Let's round that up to 60 million shares shorted. And at the very bottom, it says percentage of float shorted, 22.46%. And the average volume is 4.6 million shares a day going into this Friday. Obviously, if we only were trading 5 million shares a day, roughly, it would take 12 days of buying to get all the shorts back. And you and I both know, we all know that a stock can trade 5 million shares in a day, but that doesn't mean that the only buyers were the guys trying to cover their short position. They might be responsible for a third of the daily volume, 1.5 to 2 million shares a day at best. That would mean a 30-day window to cover your short position if your stock were to trade 5 million a day. Now, Friday, with 30 whatever million, 36 plus million traded, if half of that volume was shorters trying to cover, well, that's 18 million bought back, 30% of the 60 million. I don't know if that's the case. So let's run over a couple of scenarios here as to, well, Bruce, if those are the numbers, that's what the stock did. Why is the stock doing what it's doing? And there are a number of possibilities here. Okay, so I've written them down in not really in any sequential order, but you'll understand where I'm coming from the more we go on here. Okay, we know the stock has an average volume of 4.5 million a day. We know 34 million traded on Friday. Could it be that short sellers are just buying up the stock? Is that causing the volume surge? Because we did go from 6 million on Wednesday to 8.5 million on Thursday to 34 million on Friday. Is that a short wave panic buying by short sellers? Are they worried? Well, what caused them to want to do that? I can't see it being initiated by short sellers, but I can see short sellers now coming into the mix to cover up. That's possible. Is Ryan Cohen the CEO of the company and the company's single largest private shareholder at 14%? Is this guy buying up a bunch of stock? He's done it before. A little over a year ago, he bought 500,000 shares in like a 24-hour window. He ran the market from $21, $22 a share to 40 something. By the time he was done, the aftermarket reaction to finding out that he had done that caused the shares to jump a little too far into the 40s. It didn't last long. It came back within 3 months. It was back into the 20s. He hasn't made any filings. We haven't seen anything on Wednesday, Thursday, Friday, now Saturday, Sunday, today. There are no filings with the SEC that he's made any kind of a move on any purchases. As an insider and the CEO and the chairman of the board, whatever he does, he has to report to the SEC in a timely manner. And I would think by now we'd know if he were the buyer of additional shares of the company. Question, of course, is why would he buy more shares of the company? Does he personally feel that at $10 a share, this is ridiculous? We're turning a profit now. We've cut expenses to the bone. I'm still laying off excess people. We're shutting down stores that are not performing. If in a city like Dallas, we have 15 stores, we'll go down to 12 stores. And those 12 surviving stores will just get the business from the 3 we shut down. I mean, there's no other GameStop brand you can go up against other than maybe Target or Walmart or Best Buy. But generally, GameStop clients are loyal to the brand, and if they've got points as members, they're going to go to another GameStop store. So maybe he's thinking, look, I've cut the costs, the overhead, I've cut the staff, we're turning a profit now. This stock is just too damn cheap. I'm going to buy it up if no one else is. Okay, well, are you done now? Did you stop at $17 a share this after? Did he stop at 14 and the market momentum took it to 17? Is this game all over? We'll find out Monday morning. Okay, let's move on. What else could it be? Outsider buying stock to take over the board of directors. Okay. If you're following this channel a lot and you're following the GameStop story, you are aware that the company has basically no debts. They happen to have about 1.2 billion cash or treasury bills in their possession. And they're drawing interest of 4 to 5 million a month in interest alone is what they're making. So 50, 60 million a year in interest is what they're earning on their money, doing nothing, just pulling in interest. Could it be that there's an outside group licking their chops, thinking, you know what, if we could get rid of the board of directors that are there now, including Ryan Cohen, replace the entire management with our people. We buy stock on the open market, get more than 14% of the stock. We're the dominant shareholders. We'll kick this guy out of there. We'll get the votes to vote them out. Maybe we could do a hostile removal of the board. And then we'll run the company and we'll decide what to do with the 1.2 billion in cash, because we have companies and businesses we really want to build up. And here's 1.2 billion in money that's just sitting there. We could take this on. I don't know. I'm just asking. Why is there 34 million traded on Friday? That's 10% of the company's stock in one day. That's a lot of turnover. Another question could be, another possibility, is it a hedge fund? Is there a hedge fund out there run by a savvy leader that has done the mathematics and has looked at the situation and said to themselves, at 10 bucks, 11, $12 a share, why don't we just nibble up this stock and buy it up? And don't tell anybody, because we don't have any shares right now. Until we get to the 5% mark, we don't have to report anything. Why don't we grab up a bunch of these shares while they're down here for days or weeks? And then they ran the market into that 11, 12 neighborhood. And then the rumors started to come out, maybe within Wall Street somewhere, or there's somebody knows somebody who knows somebody who knows somebody that, well, maybe ABC hedge fund over there has been nibbling up this stock, and all of a sudden the secret is out and away we go. I haven't heard it. Have you heard it? We don't know. Is it possible that this hedge fund has already acquired 3.5-4% of the stock, got to 4.5% of the stock, and then on Thursday and Friday went in there heavy, and between those 2 days we traded 36 million on Friday, 8 million on Thursday, 44 to 45 million traded, and 30 million of those were bought by one hedge fund to create a short squeeze on the stock. Because their thinking is, if we buy up a ton of stock at 10 bucks, 10.25, 10.50, 10.75, 11, we keep buying it. We run this thing up to 14, 15, 16. By the time the short sellers get wind of what's going on, the opening salvo that they have to pay, the opening price to get out of their short positions, could be $17 to $20 a share, which is a whole lot more expensive than at 10, 11, and 12 a share. Now, these guys, if they bought it all up and ran it to 16, 17, and they have an average of maybe $13.50 a share as their cost, they keep buying this up to get to the 20 mark, and their average is under 15. The shorters, who are 60 million shares short, they can't get out for $600 million at $10 a share. They have to get out at 1.2 billion at 20 a share, or 1.8 billion at 30 a share. This could be a squeeze being caused by a hedge fund that hasn't actually happened yet. It's about to happen. Again, I'm going over all the variables. What could it be? Could it also be that there is a party out there, a group of investors, one particular leader of a group of people, like another Ryan Cohen, Ryan Cohen Take Two, who's thinking, I could buy up 15, 20% of this company pretty quickly, and I could then do a formal takeover offer of this company. I could grab it up to, say, 18, 20 bucks a share. I got 20, 25% of the stock, 70 odd million shares. And then I'll announce a takeover at 22 bucks a share cash. Take everybody out. Why would they do that? Why would someone want to pay $22 a share for GameStop shares to buy the whole company? Well, okay. Right now, as I told you, at $16 odd a share, the company has a $5 billion market cap. If you take 1.2 billion off of that value, which is the cash, that leaves $3.8 billion for the value of the entire GameStop company with 4,100 stores. Now, they earned a profit last quarter because of all those cost cuts. And the 2 quarters before that, they only lost $2 million in one quarter and $3 million in the other. They have already turned this corner 9 months ago. All right. So if this quarter coming up is a $50 million profit quarter, and the next 2 after that are $60, $70 million monthly quarters, quarterly earnings, we could have a scenario here where the company's generating $300 million in earnings. Now, $300 million in earnings on a $3.8 billion market cap company, around this price is not that expensive, actually. 20 times earning multiple on a $300 million company is $6 billion. and we have a 1.2 billion cash on top of that lying around. So really, $30 a share in a roundabout way would be a $9 billion acquisition to get the stores and the 1.2 billion cash, well-funded company, no debt. And now the owner, whoever the owner is, that could be taking the company private, by the way. This isn't a publicly traded company anymore. Now this company can be really altered and changed. So could it be a big buyer buying up stock now to put a vote out there to get rid of the directors and or take over the company, and or number 6, could the company go ultimately private? And what if it's Ryan Cohen himself? What if Ryan Cohen, as I said at point number 2, is buying up stock down here between 10, 11, 12, 13? He has gobbled up millions of more shares, and on Monday morning will declare to the world that I now don't own 14% of the company anymore. I now own 25% of the company, and I intend to make a takeover offer to take the company private. And he comes up with an $18 offer, cash offer. What about that, everybody? Now, that would force the board of directors, the shareholders of the company, to consider a vote on this offer. It would also force anyone else out there who has ideas to counter that offer, to stop him from taking over the company at 18. Someone have to come up with a $19 offer or a $20 offer. Could be a public company could come in and say, we'll take you over for $25 a share. We'll give you 15 in cash. We'll give you $10 in stock in our company. Or we'll take you over for just stock, $25 worth of our stock, for Gamestop stock. Now you guys are part owner of our existing corporation. We're much bigger than we are now. Who could it be? Best Buy? I mean, I don't know. I'm just asking. Who could it be? There's a lot of potential targets that could take over a company with 1.2 billion cash. If you can take over a company with 1.2 billion cash and only issue stock from your treasury to get the company and that cash and those locations, why not? Again, Ryan Cohen could be the guy deciding, I'm going to take this company public. And once private, I'm going to take it private. And once I take it private, I'm going to bust it up. I'm going to break it into different divisions: an investment division, the $1.2 billion, and the retail division. And you might divide the 3 retail divisions into 3 separate private companies: European company, Australian company, North American company. And he might sell off those 3 divisions one by one for cash and take a royalty on the way back, offer management services to supply them with their product. But in effect, you're buying from me the franchises in these countries. Again, I'm spitballing. There are a million ways it could be done. It could be done by Ryan Cohen. It could be done by Malcolm X, Mr. X, Miss X. We don't know. It could be done by another public company. It could be done by a myriad of entities. But it could be as simple, what's going on right now, as easy as it is to understand, that there are hedge funds out there that are short this stock, and hedge funds out there who know who those guys are and how short they really are on this stock. Dumb money all over again. And now smart money has come in and bought up all the 10, 11, 12, and 13 and $14 sellers day in and day out now for 3 days, gobbled up 35, 40 million shares, and will continue to do so on Monday, Tuesday, Wednesday, Thursday of this week. There will just keep gobbling up stock. And they'll have to declare their intention. And their intention might be, we got 15% of the company, and we intend to be long-term investors. We have no interest in taking over the company. We just want to buy the stock. We just like the stock. And that puts a squeeze on the shorts, because if these guys run this to 2022, 25, remember, 4-for-1 split we had last year or two ago, that's a $100 share stock again. Could well be that the shares get to that 25 level, and the shorters are now sitting on 60 million at 25 a pop. That's $1.5 billion. It's getting expensive. Just my thoughts. Anyway, there you go. There's a couple of thoughts. What could be going on, why and how, and what could happen and how it could happen. We have a company with lots of cash, lots of short sellers, and a cheap price. And it's a profitable company. It's not a company that's going to disappear next year like everyone thought it would in 2011 and 12 during COVID. Everyone out there thought, they're brick and mortar. They're done for. The shopping malls are closed. These guys can't even sell stock. hey, they're open. They're very open. They're alive and well, and they're growing, and they're profitable, and they got cash on hand. They have no debt. They're going to be around for a long time. Not like a Bed Bath and Beyond that went under because they were into debt up to here, and they died a miserable death. This one, it's a whole different ball game now. So follow this with me. I'll be back on the air tomorrow morning. If you follow my channel, you know I'm on the air at 8 o'clock Eastern Time. For members of this channel, especially Gold Bagel members, if you're not a member of this channel, 8:30 Eastern, I go live until 10:30 Eastern. First hour of trading included. And let's see what's going to happen tomorrow. All right, everybody. Thanks for joining me today. Have a great rest of your day today. Take care. Bye for now.